That was a huge day today, and it was a huge night last night. And I think it went about as well as we could have asked for. I had two strong conviction views coming into the election. The first was that stock volatility was elevated on the risk of a contested election, and that the range that we had fallen into, which is why the yellow light was there, was on the risk possibility of a very tight race that then led to a massive fallout days, weeks, months, or to inauguration long. And thankfully for everyone, we didn't get that. That is basically a function of the electoral victory that was delivered by Donald Trump. So that means stocks go back green. And this is where it gets very important here. Everything else holds, because in my mind, this is less about what's going to happen under the Trump administration and more just about clearing out the risk of a basically tail risk thing that's not supposed to happen in the U.S., but almost did happen last time. So then that puts a lot of ease into the market. And I think the best way to consider things still is as a continuation of trend. There might be certain things here that do take on unique Trump characteristics. Certainly, policy can have an impact in the short term, 100%. And especially now, sentiment on the expectation that it's going to have an impact is very real, too. That feedback mechanism is now a fresh force to continue the trend, which has been better than expected economic outcomes. The economy surprising positively at every turn. Inflation deflating. Yes, prices are still up, but the Fed has done a good job of keeping it under control. There's a separate risk that I want to talk about. That's the possibility that this administration would tamper with the Fed or get involved in. In my mind, that is kind of the biggest risk of this administration, the way they've talked about it, the way Vivek Ramaswamy told us that he thought the Fed had abetted inflation. So that's going to be something the market's going to have to deal with. And I don't know when it will, but that to me is the main risk. However, everything else can be thought of as potentially additive, sector-wise, thematically, what Musk is going to do, all these things potentially could have impact. But most of them still funnel down to the main themes we've been tracking. Better than expected economic data. That's why the bond red light has been there since the day the Fed cut 50, because it cued a pro-cyclical approach to the market that makes sense as economic data improve and we get all these things that have never happened after a first cut. Now they're going to cut again. That should just add more onto it. So nothing's changing here on the radar, which suggests this is more just about continuation of trend. We'll figure out what policies come. Some that have been talked about will, some won't. For the crypto crew, what's going to happen now? To me, that's a pretty big one out there that they're going to want some answers on quick. The crypto rally today also just tiny bit suspicious, and that a lot of other indicators like the Russell went to near overbought, yields, same, dollar, hot. Crypto still hasn't, looking at the Bitcoin chart, gotten to an overbought level yet, which is what I think needs to happen for it to then take off. So in my mind, even though the green light is there because it's already broken out, in my mind, I'm waiting to watch to see if that RSI can get back over to overbought. The point is, all these things will come into clarity with time. Today, we want to think about this as a continuation of the trend, which has been better than expected economic situations. The Fed doing a good job shepherding inflation and getting us on track. And the innovation of tech companies that are leading the world and keeping the U.S. on top. Everybody's thinking about what the impact of Musk is going to be. Sure, Musk the man now has another job to put on his plate. Musk the CEO now has more places to share his mind, but he's done a pretty good job multitasking so far. But ultimately, he too is continuation of trend. Big tech disruption has been at the heart of the market. Almost everything here is a continuation of trend that the market was worried might get distracted by a major geopolitical event. So now that we have moved on past that, thankfully for us as investors, as Americans, as people, as friends, breathe the sigh of relief, and we'll figure out the rest of the stuff as it comes for the market. But right now, continuation of trend is what this is about. Have a great night.